Okay, so my name is Muhammad Azizul Hakim bin Ismail, and my job is to show you guys our company Tucano Victor Store financial statement analysis. So here we have applied the vertical and ratio techniques to analyze the company financial statement. Okay, let's take a look at the vertical analysis of profit or loss at the end of accounting period, which was 31 December 2022. As you guys know, vertical analysis is a method of financial statement analysis in which each line of the item here is listed as a percentage of a base figure within the statement. Normally, for profit or loss statement, we will use the net sales as our base figure. So the first item you must put in the statement is obviously the net sales. So our net sale is 24,100 ringgit. So we write the formula for this sale is we write equals and then statement of profit or loss exclamation mark and then G7. The easy way we can do this is we just write equal and then go to the statement of profit or loss and then go to the G7 cell and then we click enter. After that, the amount will automatically appear in your cell. So in the cell of the percentage which is I7, we write the equals H7 divide by H and then we put the absolute cell reference and then 7. Next is cost of goods sold. Our cost of goods sold is 9,850 ringgit. Same like the net sales cell, we write equal and then go to the statement of profit or loss and then find the G16 cell and then we click enter and then the amount will automatically appear like the net sales. So to calculate the percentage of the cost of goods sold, we must divide the cost of goods sold with the net sales and then times 100. Same with the other item in the statement like expenses, total expenses, other income, and net profit. We write equals and then go to the statement of profit or loss and then find the item there and then we click enter. The amount will automatically appear in the cell for you. And for the percentage, we just copy the net sales percentage formula and then we paste to the other cells. That's why we put absolute cell reference, which is the money symbol, because we want to divide with the net sales. So we make all of these cell to refer to the net sales by putting the money symbol, which is the absolute cell reference. Oh, not to forget, we must change all of this format to percentage. So it will appear in percentage format. So as you can see here, our cost of goods sold is 40.87% of the net sales, which is 9,850 ringgit. For the expenses, we got 50.46% of the net sales, which is 12,160 ringgit. While for the total expenses, which is 91.33% of our net sales, which is 22,010 ringgit. While the other income is 16.18% of the net sales, which is 3,900 ringgit. So our net profit is 24.85% of the net sales, which is 5,990 ringgit. So that's it for the vertical analysis of profit or loss. So next we'll look at the vertical analysis of statement of financial position as at 31 December 2022. This is just the same as vertical analysis of statement profit or loss, but for financial position, we will use owner equity as our base figure. So our owner's equity is 155 and 990 ringgit. So for the formula of the sale, it's just the same as the net sales formula. First, we write the equals and then go to the statement of financial position. And then we find the owner's equity sale, which is I-22 sale. And then we click enter. And the amount will automatically appear in the cell. Same with the other items in the statement, like non-current asset, and total asset. We write equals and then go to the statement of financial position and then find the item in the cell and then we click enter. The amount will appear automatically in the cell. For the percentage of owner's equity, we get the owner equity and divide it with the owner equity itself and then times 100. For the formula, we just write equals and then cell H20 divided by H and then we'll put absolute cell reference and then 20. H20 is our honest equity amount right here. And then we will copy the formula and then paste to the other item cells. And then we'll automatically get the percentage. And then we will change the format to the percentage. So the percentage will appear. So our non-current asset is 37.23% of our owner equity, which is 58,080 ringgit, while the current asset is 98.22% of the owner's equity, which is 153,210 ringgit, while the total asset is 135.45% of the owner's equity, which is higher than the owner's equity, and the amount is 211,290 ringgit. So that is for the vertical analysis of statement of financial position.
So the last statement here, we are using ratio analysis. In ratio analysis, we got profitability ratio, liquidity ratio, and asset efficiency ratio. So let's take a look at our statement of financial position for the month ended 31 December 2022. So under the profitability ratio, we got gross profit ratio. The formula for the gross profit ratio is gross profit divided by net sales. We calculate that and then we'll get the answer, which is 59.13%. And then under the profitability ratio, we also got net profit ratio. So the formula for the net profit ratio is net profit divided by net sales. And then we calculate that, we'll get the answer 24.85% of net profit ratio. So under the liquidity ratio, we have current ratio. The formula for the current ratio is current asset divided by current liabilities. We calculate that and then we get 4. We calculate that and then we'll got 4 ratio to 1. The current ratio indicates the ability of a business to repay its current liabilities when they become due. So every one current liabilities, we got 4 current asset to repay it. While under the liquidity ratio, we also got acid test ratio. So the formula for the acid test ratio is total current asset minus inventories and minus prepayments. And then you buy all of that to the total current liabilities. We calculate that and then we'll get 2 ratio to 1. So the last is under the asset efficiency ratio, we have inventory turnover ratio. The formula for the inventory turnover ratio is cost of goods sold divided by average inventory. First, we need to find average inventory. So our average inventory is 75,000. So our cost of goods sold, we will divide it with 75,000 and then we'll get the answer is 0.13 ratio to 1. This ratio measures the efficiency of a business in managing its asset to generate revenue. This indicates how many times the inventory has to be replaced within an accounting period. So that's it for the ratio analysis of the statement of financial position. So to conclude this, the reason we make financial statement analysis is because by doing so, we can identify the weaknesses as well as the strength of a business and also to take appropriate steps or actions to overcome any weaknesses while also enable the business to improve its overall financial situation in the future.